Hi, how are you? The following video is just a bit of a budget summary from the 2016 federal budget. Overall, the changes were not significant for the vast majority of the population, and in relation to our clients, the major changes that are relevant were the change in the middle income tax bracket from $80,000 to $87,000, some small business capital gains tax changes for incorporated entities as well as unincorporated businesses, and the increasing of the threshold for the definition of a small business. In relation to superannuation, the changes are more significant, but again, these are mainly for higher income earners and larger amounts in superannuation. The major changes in this regard was the introduction of a $1.6 million cap for entering into pensions within superannuation. And I just want to make clear, this is $1.6 million per individual. So a couple, it is $3.2 million. So that's a significant amount of money and is unlikely to affect a large portion of the population, but is still relevant. An individual can still have more money than that inside superannuation. It just must sit in accumulation phase where it's taxed, where the investment earnings are taxed at 10 or 15%, depending on whether you're talking about capital gains tax or ordinary income tax on the superannuation earnings of that excess money. Other changes is the reduction in the concessional contribution cap down to $25,000. Currently this is $30,000 for people age 49 and under, and $35,000 for people age 50 and above. Look, that's just reducing that cap back to what it was a few years ago. I still think that cap is insufficient to incentivise people to put away enough money to build up sufficient superannuation monies to fund them for their entire life in retirement. Additionally to this, there has been brought in a $500,000 non-concessional contribution cap, and it's a lifetime cap. And again, that is $500,000 per individual or $1 million per couple. This cap actually starts from last night, the 3rd of May, and it is basically talking about where you put in after-tax contribution to super. You are now limited to $500,000. Any contributions that have been put in before budget night and from 1 July 2007 to now will also count towards that cap. But if you're already over that cap, doesn't mean that money's got to be taken back out of superannuation. It just means you cannot put in another dollar into superannuation from after-tax earnings. You can still put in concessional contributions of up to $25,000 a year, but you cannot put in any further after-tax contributions. This measure is obviously not legislated, has got some difficulties into how records are going to be maintained over a lifetime, and how people are going to be able to access that information to make sure they continue to comply with it. But suffice to say, it's there. It will challenge people to get money into retirement, given typically people don't have that sort of money to put in towards the end of their working career, and then if they don't have much in super prior to that, it may not be sufficient money. On top of that, they've made changes to transition to retirement pensions, and that is basically if you transition into retirement by starting a pension through your superannuation while still working, the investment earnings on the money within super that's in pension phase will no longer be tax-free. They will be taxed as normal superannuation investment earnings at 10 or 15%, again depending on whether you are talking about capital gains tax or income tax rates respectively. This measure will have an impact on people in transition to retirement pensions, and generally it would be said you'd be better off if you were able to trigger a full retirement definition, and then your investment earnings within super would be completely tax exempt, but that for many people is difficult, especially if they want to continue to work. So that's one measure that will have to be looked at going forward. On a positive note, there are changes in relation to anyone can make personal tax deductible contributions to superannuation, whereas currently this can be done for self-employed people, whereas employees have got to salary sacrifice it. So look, in the end, we generally end up getting to the same outcome, but this might make things a little bit simpler to administer. Additionally, they have removed the work test for people aged 65 and above. Basically, if you're age 65 through to age 75, you will now be able to make contributions to super without having to meet a work test. The work test is currently 40 hours per month, and this will be abolished, and so whether you're working or not, you can still make contributions to super. That is a good measure and a needed measure, because we are finding a lot more people work up to age 65 and a bit beyond that, and then when they retire they find they're not working, and therefore they may not be eligible to put money into superannuation. So this is a good measure. So overall, the measures in the budget don't really affect the vast majority of the population. Certainly there's changes in relation to the amount you can put into superannuation and the amount you can put into pension phase, but generally these are for larger sums of money that are within superannuation. The only other change that's relevant is there is a change in relation to high income earners, where they'll be taxed at 30% on their contributions if they earn over $250,000, rather than the 15% contribution rate that otherwise applies. Currently that rule exists, but it's for people earning $300,000 or above, so it'll just capture a broader net of people, but again, a smaller part of the population. So look, overall, the measures have yet to be implemented into law. We have a election coming up on the 2nd of July, so look, a lot can change between now and the implementation date of a lot of these measures. We have attached a white paper which goes through these measures and when they come into force, and most of them come into force from 1 July 2017. The only one that is significant that comes into force from budget night is the non-concessional cap of $500,000 for contributions made to super from after-tax monies, which applies immediately. So look, again, these are all unlegislated, so individuals need to tread carefully and cautiously and seek advice before acting. So look, I hope you found this useful. If you've got any particular concerns about measures that may apply to you, please feel free to contact us. We'd be more than happy to step you through it. Cheers and bye for now. Goodbye.